In 2025, the Internal Revenue Service (IRS) is intensifying its efforts to ensure tax compliance, focusing on high-income earners, cryptocurrency transactions, unreported income, and fraudulent deductions. With increased funding and advanced technology, the IRS aims to close the estimated $160 billion tax gap attributed to the top 1% of earners. 1. High-income earners and wealthy individuals. The IRS is prioritizing audits of high-income individuals, particularly those earning over $400,000 annually. These taxpayers often have complex financial situations that can lead to underreporting or misreporting of income. The agency is using advanced data analytics to identify discrepancies and ensure accurate reporting. 2. Cryptocurrency transactions. With the rise of digital currencies, the IRS is closely monitoring cryptocurrency transactions. Taxpayers are required to report gains and losses from crypto activities, and failure to do so can trigger audits. The agency is leveraging blockchain analysis tools to trace unreported crypto transactions. 3. Unreported foreign income. The IRS is increasing scrutiny on unreported foreign income, including earnings from overseas investments and foreign bank accounts. Taxpayers are obligated to disclose such income, and the IRS is utilizing international information sharing agreements to detect non-compliance. 4. Fraudulent deductions. The agency is targeting taxpayers who claim deductions without proper documentation or for expenses that don't qualify. Common red flags include inflated charitable contributions and unsubstantiated business expenses. The IRS is implementing stricter verification processes to combat fraudulent deductions. 5. High-volume or high-dollar charitable contributions. While charitable giving is encouraged, the IRS is scrutinizing large donations, especially when they appear disproportionate to a taxpayer's income. Claiming substantial charitable deductions without adequate documentation can lead to audits. 6. Employee Retention Credit (ERC) abuse. The IRS is investigating claims for the Employee Retention Credit, particularly those from businesses that don't meet the eligibility criteria. Some taxpayers have been found to falsely claim this credit, leading to increased audits and penalties for non-compliance. 7. Clean energy tax credit misuse. With the expansion of clean energy incentives, the IRS is focusing on preventing misuse of these credits. Taxpayers claiming credits for solar panels, electric vehicles, or energy-efficient home improvements must ensure they meet all requirements and maintain proper documentation. 8. Pass-through entity tax shelters. The IRS is targeting abusive tax shelters involving pass-through entities, where income is shifted to avoid taxation. These schemes often involve complex transactions without substantial economic purpose. The agency is enhancing its efforts to identify and dismantle such arrangements. 9. High-income non-filers. The IRS is focusing on high-income individuals who have failed to file tax returns. In 2024, the agency launched an initiative targeting over 125,000 high earners who hadn't filed returns since 2017. This effort continues into 2025, aiming to recover unpaid taxes. 10. Tax-exempt organizations misusing status. The IRS is scrutinizing tax-exempt organizations, including nonprofits and educational institutions, to ensure they comply with regulations. Misuse of tax-exempt status, such as engaging in unrelated business activities or failing to file required forms, can result in penalties or revocation of tax-exempt status. The IRS's increased enforcement in 2025 underscores the importance of accurate tax reporting and compliance. Taxpayers should be vigilant in maintaining proper documentation, reporting all income, and adhering to tax laws to avoid audits and penalties. For personalized advice, consulting with a tax professional is recommended.